Hi, I'm Pattu from freefincal. Today, let's take a look at the factor-based ETFs and index funds that are available in India. These are also called as smart beta ETFs or index funds or strategic index funds or ETFs. I'm not showing you my face because I'm not wearing a shirt. I'm just too lazy to do it. I'll just try and get it on tomorrow. So, what's the factor-based index? When you look at usual indices like Nifty, Sensex, Nifty 100, Nifty Next 50 and so on, they are market capitalization based indices. That is, they just select stocks according to market cap. They look at the top 10 or sorry, top 30, top 50, top 100 stocks by market cap, and then they list them by descending market cap, and the stocks with the highest market cap gets the largest weight in the index. Whereas in a factor based index, what they do is to choose stocks by using a factor like low volatility, momentum, alpha, quality, value, etc., and then they weight the stocks by using that factor. That is, the stock with the lowest volatility over the last 1 year gets the highest weight, and so on. So to some extent, this can eliminate the problems caused by market capitalization based indices. That is the concentration risk, where most of the index returns are driven by just a handful of stocks to some extent, but that depends on the index concentration construction rule. As we shall see below. So this is the list. We have a DSP equal Nifty 50. This has got equal weights of the 50 Nifty stocks. Principal Nifty 100 equal weight and Sundaram Smart Nifty 100 equal weight. These take the Nifty 100 stocks and equally weight them about 1.82% or so in the case of Nifty, the DSP fund, and about 1%, 1-ish% for the Principal and Sundaram funds. Of course, there's be a little cash and so on, so you can't have exact matching, but that's approximately what it will be. So, and then you have the ETFs. All the rest are ETFs. There are only 3 index funds, and then you have the Nifty low volatility 30 ETF from ICICI, Nifty 100 quality 30 ETF from Edelweiss. Then there are amusingly 3 value 20 ETFs, one from Kotak, one from Nippon India, and one from ICICI. So the ICICI low volatility 30 ETF picks the 30 low stocks with the lowest volatility from Nifty 100 over the last 1 year. There is a capping on this. There is not a explicit capping on the stocks, but if the stocks that are selected has a turnover less than any Nifty 50 stocks, then it's capped at 3%. But if you look at the current weights, they're not too much. It's not a bad deal at all. What I best like is the Nifty 100 quality 30 index, in the sense that the capping here is limited at 5%. So no stock can have a cap of can have a weight of more than 5%, which is a very good thing in terms of concentration risk. And these stocks are chosen with they are chosen from the Nifty 100 and the Nifty mid cap 50 indices, and they look in terms of the ROE, the leverage, the debt to equity, stable earnings, and so on. And that's a definition of how they choose quality. So then you have the value 20 from the value 20 index. Unfortunately, this has got a maximum cap of 15% weight. That is, your stock in the index can have up to 15% weight. So that's a problem, especially with value stocks, because if you choose stocks which have low PB, low PE, high dividend yield, and so on, and if the stock is not moving up, then the index will suffer. And especially if you have such a large weight, this can be a big problem. And so I would definitely not even consider this Nifty 50 value 20 index, even if it came in the form of a index fund. Then I've also gone on to list the expense ratios, the tracking errors, and so on. I would like you to have a look at it. Go to the article in the community page and have a look at it. All that said, I want to be very clear that I'm not recommending this. This is just a list, so that if you want to search for this, you have the list in one place. And these are very low AUM, and definitely the index funds The three index funds are not recommended, especially the ones from Principal and Sundaram, the Nifty 100 equal weight funds. The DSP fund, you can notice how risky the equal weight Nifty 50 fund is, because I've been talking about the imbalance in the stock market, and there's a huge imbalance between Nifty 50 and the Nifty 50 equal weight. So as long as that imbalance is kind of remedied, the risk will always be there in that kind of funds. And so I'm not recommending any of the funds in this list. Let me be very clear about that. This is just for information about what's going on, and if you want to track the fact sheets of the stocks in these indices and so on, you can have a go at it. So that's pretty much what I wanted to say in this video. I'll catch you later. Bye bye.